Welcome back to Your Average Investor. Today I'm going to be telling you how to use Thinkorswim's on-demand feature to backtest trading strategies and look at historical options data. Now, if you've never used on-demand before, it's very easy to get there. Just log into your Thinkorswim account with Schwab and click on the on-demand button. You'll notice it takes a couple of seconds and then your screen shifts slightly. You'll get this little orange on-demand up in the corner here, and you'll notice your account. If you've been in Thinkorswim's on-demand before, it might have something else. Just click this little button here to reset your balance, and it will look like this, where you've got $100,000. It says these are simulated values, and it will put you at some random date in the past. And you can change this date. This is what's one of the great things. I can go back as far as, I think, 3 years back. So I can go March of 2020, and check this out. In March of 2023. We're going to go back as far as we can with data here. I thought it was 3 years, so maybe we can only go to this. Let's go here. We're going to go April 18th. There we go. And let's just say I wanted to try to play my hand at how good I was at trading through this dip. There's something that's really powerful about being able to go on demand, set up all of my indicators, have all of my rules, and if an indicator triggers, to enter a position when it triggers. So let's say that maybe I wanted to add a study here. Let's see. Let's make this maximize this. We're going to add like a VWAP with bands or something like that. So maybe I had this study up and I was like, okay, my pattern or my trade is that if it cuts below the VWAP up above it, goes below, above, and now it cuts below again, I'm going to enter puts because I think that it's going to be coming back down just like it did earlier in the day, right? I see it cut below, so I'm going to enter puts. It's just I don't know. This could be a terrible strategy. I'm going to do 0 data expiration puts. That's what I'm going to do here. So I'm just going to buy puts that are just out of the money, and I want to see what would happen. And now I can sit here and I can wait for this, and that's fine. Or I can click on this little arrow here. This fast forwards with a 3x, so now every 1 minute is 3 minutes, and it's just going to go faster. I can hit play to go back to normal time. I can also click this step forward button here. This will boost me 10 minutes into the future. So you can say, oh, look at that, 10 minutes into the future. The price is looking good. Oh my gosh, though, why is this down? It may not be down yet. You notice up here it says pre-buffering. It's still, Thinkorswim's trying to gather all the new data for this time. And so once this stops and goes back to on demand, now I can see, look at that beautiful trade. I've got a nice healthy 30% profit or so, and I can choose to sell that or continue on in the trade or what have you. Now let's just say that I wanted to sell, but I wanted to sell with like a trailing stop order or something like that. So in this case, I'm going to come in, I'm going to click sell. I'm going to switch my limit to, or maybe a stop limit, right? Let's go stop limit here. And if or stop, we're just gonna make it a super simple. We're gonna make it a stop, and I'm gonna say if the price comes back to, let's say what I bought at 44, so $53. They give me like a 15% profit or something like that. Then I can put that in, and you'll see that it puts this order in. Now, if I use this skip feature again to step forward in time, and the price has moved to where it skipped over that, I'm not going to see this trade execute. So if you enter in something like a stop order or a limit order for your buy, then the best thing to do is just fast forward the time like this. And that's going to keep moving the time forward a little bit faster, so you don't have to sit there and watch the entire time. But it will also give you the opportunity to just wait and see what would have happened for that to execute. And I'm going to go ahead and pause it now. I'm going to say, wow, look at this. I'm now up 84%. Let me go ahead and hit play real quick. And this is on demand. So I'm going to get rid of this trailing stop and say this is just when I would have closed the position. So let's just go ahead and hit close here for, look at that, $82. So we just made a healthy profit of nearly 100% on that trade because my strategy of watching for it to cut below the VWAP and move back down or whatever it was worked out well. And I made a nice $38, right? I started with 100,000, now I have 100,038. Except for, if you look at this, and all of you will recognize this if you're familiar with options, I bought at 44, I sold at 82. That's an exactly $38 difference, but I should have had to pay commissions on this, right? You're going to pay a commission to open an option trade and to close an option trade. Generally, your commissions will be between like 40 and 65 cents, or maybe a little more per contract. And so that would have cost me maybe 90 cents, maybe $1.15 or $1.20 to open and close that trade. And so really, I would have only made $37 or so, not $38. Now, in a trade like this where it goes 80%, not that big of a deal unless, let's just say I was going like this. And I said, I want to buy this option contract here that's currently going for $2, and then I'm going to sell it for 100% gain at $4. Well, a $1 commission on that trade is going to be a significant, I mean, it's going to be half of your profits. And so obviously that's going to dramatically make you look like you have a better, more successful trading strategy than you actually do. Whereas if I'm buying, an option contract that costs $500 and it goes up by 100% and I sell it, then yes, you're going to be missing out on that commission, so your profits won't be exactly accurate, but overall it doesn't impact you nearly as much. So keep that in mind. On demand does not take care of the option contract commission fees that you would normally have to pay. Now, the other thing that it doesn't do well is give you a realistic fill, unless there's a tight bid-ask spread. So all of these, there's bid-ask spread is pretty tight. But let's say I wanted to trade something like, Sam Adams, that they've got option contracts, but they're pretty illiquid. And they get traded a little bit, but not a ton, right? So you can see like the volume here, 1, 4, 0, 35. The bid-ask spread on these is quite large as well. You can see 5.7 to 8.3. If I go here and I try to buy this, it's just going to fill me right at the mid every single time, $7, or as close to the mid as it can get. If you were to buy that on a live market, very likely maybe you'll get a little bit better of a fill than the ask. You might get it at like 8.0 or 7.75 or something. If you just like blindly did it like that, but usually you'll just get filled right at the ask if you do that. Now, if I came in and I set a limit price of like I want to buy it at $7, right? Then maybe you'll get filled on the open market for your mid if you're trying to split the bid ask. But you have to actually go in and do that yourself. Set your own limit at the bid as opposed to just buying at the ask. And then same thing here when I'm selling. If I sell this, it says 5.7, but you'll notice up here it's going to fill me at 6.95 because it just took whatever the mid was and just said we'll just fill you at the mid. And because of that, you're going to also have very unrealistic expectations if you have been trading with on demand and you've been trading illiquid options and thinking you have a great strategy, but really all that's been happening is you've been getting excellent fills that you wouldn't normally have gotten on the open market. So let me go ahead and let's switch this back to SPY. I'm going to show you a couple more ways this can be very useful. And if you haven't already, please subscribe to the channel. It does a lot to help us out as we're working to monetize this channel. Also, check out the website, guys. If you wouldn't mind, we just got approved for AdSense, and I want to make sure it's working. So just let me know in the comments if you see ads on the website. That's another way we're monetizing. You don't have to click on the ads or anything. Google just pays us for displaying them, which means we can do more raffles, more giveaways, stuff like that. Okay, back to on demand. So let's say I was interested in trading leap options. This is one of my favorite ways to use it, right? Let's say I wanted to trade leap options instead of trading like day trading. Day trading is great, and this is a great way to backtest it because you can quickly jump back and forth in a day. But let's say I wanted to trade leaps, and let's say I had a rule set like if SPY declines by 10%, buy leap options, right? So we had a high here of 480, so we're just going to go 480 times 0.9. That's 432. So when did SPY first hit 432? It would have been right here on 124. So I'm going to rewind to 124 because that would have been the day that I would have entered if I had a rule that said anytime SPY dips by 10%, buy leap options or something like that. And then we're going to see what happens. So it's like, wow, look at that. That looks so good, right? Look, the chart looks way better for an entry now that we, quote, don't know what happened next. But even though we do know what happened next, we're like, all right, SPY dipped. And let's say you would have actually like, we'll give you a really favorable dip and say, yeah, you didn't get the low of the day, but maybe you got like, we'll go right here. We're going to rewind to 936. So what I can do to rewind to 936, just come up here, change this to a 9, hit go, and then it's going to rewind the day to about that time. So you can see now that same day, but it's back here, we're at like 427. So like, okay, cool. I'm going to enter my position as soon as this buffers. And also this is military time, so if you're fast forwarding, 12, 13, 14, 15 instead of 12 and then back to 1, so make sure you keep that in military time. Okay, now you see the pre-buffering's gone, so we can go to the options. And let's say I was like, okay, the plan was, what did I say, buy leaps. So we're going to buy 365 days out, or as close to that as we can get. And I'm just going to buy one contract right out of the money. And then let's say I wanted to experiment, right? Let's say, okay, well, what if I bought something that's right out of the money, but then what if I also bought something that's like significantly out of the money, like back at the all-time high price. So this is the right out of the money price. This is the all-time high price. Okay, let's just buy them both, see what happens. Cool. Now I've got two different contracts that I can just experiment with and see what happens. And so we're going to fast forward now to, let's just go back to where we were at 1337. And we're going to say, okay, what happened at that point? Wow, would you look at that? Both of these contracts are profitable. We've gained 9% on the leap contract that was just out of the money. We've gained almost 12% on the one that was a little further out of the money. But, and I'm going to give a big but here, again, take a look at these bid-ask spreads, right? So here's my fill. This one, the bid is actually above the ask, so that would make money. But look at my fill price here, $14.06. $14 on the bid, $17.05 on the ask. So, yeah, maybe I get filled at the mid, but maybe not. So keep that in mind again. Now let's just say I wanted to fast forward one day. I'm going to click here, and we're just going to go forward to, what day is this? This is January 24th. So we're going to just go to January 25th and just say, okay, what would have happened if we just held till the next day, right? One day later, and see if the price keeps on moving up. Pre-buffering, and almost there. There we go. So now we've got the next day, and darn it, it hasn't really moved up all that much more. So let's just say, like, what if we just held for till the end of the week, right? That was our strategy, is buy, hold for 5 days, and then sell. So now I can just fast forward 5 days, and I can see what would have happened. So now we've got the new data here in this candle. These are weekly candles, by the way, so let me just change this to like 2 year, 1 day. That'll make it a little bit easier. There we go. So we can see here now our entries a little bit clearer based on these daily candles, a little bit more clearly. And again, when this switches from pre-buffering to on-demand, all right, so I still haven't changed much. 10% here, 7% there. Okay, it was an all right strategy, but what if I held this all the way till expiration? Of course, we know what's going to happen because the price kept on dipping for the next year. But if I wanted to just push this out a whole year, so we're in January right now, I could hit this little arrow right here to move forward a full month, or I can hit the big arrow to move forward a whole year. So the double arrow moves forward a whole year. Again, this is January 20th, so I want to make sure I don't go past that expiration. So we'll just go January 19th. I'm going to switch to that day. And of course, these are going to be worth nothing because we bought somewhere in here, right? And now the price is lower. These are far out of the money. And there's obviously just going to be no value in them. But let's just pretend that you wanted to continue with the strategy. Look there. Nobody wants to buy them. So I'm just going to reset the account. Can't do anything with that. Let's just say you use this to better fine-tune your strategy. Okay, well, that didn't work. What if I waited until a 20% dip or a 30% dip? And then I started. How would that have looked if I bought leap options then? So very helpful to use for looking at historical options data, for fine-tuning your methods. And again, what's great about it is I'm jumping around in the dates here, but this is still far in the past, right? This day that we're on right now, as of today, this is over a year in the past. So I could rewind this. I could go to some stock that I don't know what the history of it is, and I could just look at it and say, okay, well, let me just pretend I'm coming in here blind, and this is my, let me switch to like something, I don't know, what's a stock that I don't watch very often? Target. Let's say, because I don't watch Target very often. But funny enough, I did put some price lines on Target at one point, so I guess they're still on here. So let's just say I wanted to look at Target, and I was like, okay, this is my new stock that I want to just try and test out this channel trading strategy on, and Target looks like it's got a channel here and here. So I'm just going to fast forward a little bit to see if Target hits either the top or bottom of this channel, and then I'm going to short, right? So then I can just go here and say, let's fast forward. Today's the 19th. Let's go forward one more week to the 27th. See what happened. We're coming to the top of the channel. Gonna fast forward again to the 3rd and see what happens. There we go. So now it's like, okay, we broke above the channel. It looks like we're coming back down. So I'm gonna enter some put contracts, or I'm gonna sell short target stock or whatever it is. So let's just enter, once this buffers, we're gonna enter put contracts and continue to fast forward it, see what happens. And then part of my strategy is I see that it takes about, I don't know, a month or so, a month to move up, 2 months to move down. So I'm going to get some put contracts with a little bit of time. I'll go 90 days out or so. We'll go 77 days here. And I'll just buy these put 175s, right? So there's my put 175, spent $1,000, and I'm just gonna bump to February 24th. So towards the end of the month. Look at that. It ended up nicely moving out off of this channel, and we'll wait for this to update, and then I can decide, if it hit my price target, if I would have sold, or if I would have continued in. Beautiful, 46% profit. I'm going to go ahead and sell that position. So I can test these strategies, right? I can also test them on if I'm a scalper on a day trading. Oh, look at this. It's at the upper band of whatever, and last time it hit the upper band, it swooped back down. So I'm going to, however you want to scalp it. You can set up your indicators, your strategies, and use that for trading. Thanks for tuning in, everybody. Comment below if you have any questions, and we'll catch you next time.